Home builder sentiments are showing lower than desired as they continue to incentivize the home buyers currently in the market to sway them away from existing home sales. And if mortgage interest rates don't come down significantly anytime soon, builders may need to start offering even more incentives to stop the bleeding of operating costs of their unsold inventory. And right now, the months of new home supply are steadily increasing, reaching high levels of unsold inventory not seen since 2007. I'm sure investors are just waiting on the sidelines to gobble up the inventory at a major discount to add to their for-rent inventory. The question is, can home buyers take advantage of this opportunity to buy a new home for cheaper than anyone else has in the newly built community? If you're new to Sachs Realty's channel, I'm Todd Sachs, a Maryland real estate broker, and my job is to keep you informed on what's happening in the real estate market. So now would be a great time to subscribe to our channel and hit that alert bell so that you're notified when we post important market updates like this. I want to start with a Fed chart that maps out the number of months of supply of new homes available in the U.S. But before we do, let's define what the term months of supply really means. On QuickenLoans.com, you'll see that the month's supply measures how many months it'd take to sell all the homes in the current housing inventory if there are no new listings or changes in the current sales pace. This is also known as the absorption rate because it signifies the rate at which the market will absorb existing homes in the current inventory. Now let's take a look at this Federal Reserve chart of new homes months of supply. Now I do want to apologize for the Federal Reserve's data. They are a little backward looking. This is often the case with the housing market, unfortunately. But I first want to take a look at the 1 year view. And really, in the 1 year view, what's most alarming to me is the amount of supply, new home inventory, that shot up in just 1 month. So if we look here in September, we had 7.7 months of supply. And then 1 month later, we shot up to 9.5 months of supply. So you may be asking, how many months supply is normal? Many housing market analysts think a 4 or 5 month supply is considered average. A balanced market, good for both buyers and sellers, is about 6 months of supply. And really, when we get less than 4 months of supply, it's considered more of a seller's market. And the exact opposite, once we go over 6 months of supply, it's considered a buyer's market. And in my opinion, when we're looking at 9.5 months, that indicates that builders should really be concerned. Now let's go ahead and change the view to the maximum view. And this takes us back to 1963, all right, on this chart. And you can see, and what I want you to pay attention to here is, not just the spikes in inventory, but what I want you to see is we are really, we're at an inventory level that takes us back to 2006, 2005, 2006. And when we look at these different inventory peaks here, what that indicates, if you look at when we had a spike in new home inventory, these gray bars here that are, kind of going up and down, these vertical gray columns, they're actually indicating times of a recession. So I think the big thing to watch out for here is we're really spiking high. And the question would be, what's coming next? So since 1963, again, there's been very few peaks where we've seen new home inventory get to 9 months of supply. Now, before we take a look at what states have the most new home inventory, I want to switch to another chart. Okay, so in this chart here, we're looking at existing home sales housing inventory, and it only goes back to October of 23. But what I wanted to show you here is the rising amount of existing homes that are hitting the market in the last year. It's a really an upward trend that we haven't seen in many years. And of course, this is nationwide. So let's see what's happening with the months of supply of existing home inventory. So in this chart, this is the month supply of existing homes on the market, just to keep it consistent with the new home chart that I showed you previously. What we're looking at here is, again, October, it only goes back to October. We were at about 3.6 months of supply of existing homes. Now we're sitting at about 4 8.2 months of supply as of October. That has gone up a little bit, but what I wanted you to see in comparison is that the new home supply, the amount of months of new home supply, is more than double existing homes. Now, keep in mind the real estate market changes depending on where you're located, so it is very regional. But for instance, in Maryland, where we're located, we have a lot more existing homes on the market, way more months of supply than we do new homes. And that's because we don't have a whole lot of construction, new home construction, that's going on in states like through the Sun Belt. Now, where can you find the bulk of new home inventory? According to Realtor.com, they published an article, and by the way, guys, all of the links to my charts and cited information are below within the show notes. The Realtor.com article titled, Top 10 Cities with the Most New Construction Homes, and Now They're Affordable Too. Well, affordable, I guess you could be the judge of that, but well, they may get a lot more affordable if the inventory keeps rising. But I'm not going to bore you and take you down through the road of the top 10 cities, but I do want to highlight some interesting points within the article. Like this one. If you're considering buying new construction, look to the south. Cities across the Sun Belt are dominating the new construction market right now. Metro areas in North and South Carolina, Texas, Tennessee, and Georgia are among the markets with the largest share of new construction. The influx of new housing stock is also a boon for buyers who skipped the competitive housing market of the past few years and are now coming off the sidelines thanks to lower mortgage interest rates. I really think that they meant to say, since builders who own mortgage companies are offering rate buydowns, some as low as 5.5%, I've heard, for a 30-year fixed-rate mortgage. But please don't be fooled of the statement inferring that buyers are coming off of the sidelines. Not many buyers are coming off of the sidelines yet. As I just showed you, inventory of new homes are skyrocketing, and believe me, it's probably worse than reported. I seriously doubt that the Census Bureau is showing all of the home builders' inventory. Well, how about this? Swelling listing pages lead to downward pressure on home prices. In several markets with the largest share of new construction homes, Sanford, North Carolina, Raleigh, North Carolina, and Boise, Idaho, the median price of new construction homes is lower than for existing homes. So how are the home builders feeling about their lack of home sales and skyrocketing inventory? Let's take a look at the National Association of Home Builders website, who publishes a monthly overall home builder sentiment. The NAHB Wells Fargo Housing Market Index, HMI, is designed to gauge and track the pulse of the single-family housing market. The HMI is based on a monthly survey of single-family builders who are asked to rate 3 specific conditions of the housing market: present sales of new single-family homes, expected sales of single-family homes within the next 6 months, and traffic of prospective buyers of new single-family homes. Each month, the HMI depicts overall builder sentiment towards housing market conditions on a scale ranging between 0 and 100. A higher reading, greater than 50, is an indication that the majority of builders feel confident about the current and near-term outlook for housing. Lower readings signify less optimism among builders. HMI key findings, November 2024, builder confidence in the market for newly built single-family homes was 46 in November, up 3 points from October. So it's less than 50, reflecting less optimism overall. Sales expectations in the next 6 months increased 7 points to 64. Home builders seem to be hopeful that by May of 2025, home buyers will be better off financially, I guess? Well, what do you think? But look here. The latest HMI survey also revealed that 31% of builders cut home prices in November. This share has remained essentially unchanged since July, hovering between 31% and 33%. Meanwhile, the average price reduction was 5%, slightly below the 6% rate posted in October. The use of sales incentives was 60% in November, slightly down from 62% in October. But before we go any further, let's talk about dropping the price of the home versus The sales incentives. A home builder will try at all costs not to drop the sales price of the home. As you can imagine how mad buyers that bought before the price drop would be at the builder still hammering in their same community. Builders dropping home prices could also be a problem to anyone that recently bought a home in the community that needs to sell for any reason, as the builder could be potentially offering a better price to new home buyers than they would need to sell to prevent them from losing money based on what they paid prior to any price drop. So how are these publicly traded home builders' stocks performing these days? Let's take a look at a few of the larger builders. It's important to say that I am not a financial advisor, so I'm just looking at the same data that you can find yourself online, and I probably have actually less knowledge of the stock market than you do. So this is not financial advice and should not be taken as such. I want to start out with NVR. Now, they are a Fortune 500 company and one of the largest home builders in the US. And according to their website, they've actually helped more than 500,000 homeowners. And it goes on to say that NVR Inc. operates two business segments, home building and mortgage banking. The home building unit sells and constructs homes under the Ryan Homes, NV Homes, and Heartland Homes brands. It also says that NVR Inc. builds homes in 36 metropolitan areas in 16 states. Let's look at NVR stocks. And this is as of December 17th, but you can see here over the last year, I mean, it really started shooting up in July, almost as if somebody knew something. But the important thing to see is now it looks like stock prices are going down. Now, I want to take a look at the max view as well, because in this slide, I mean, really, wonder what's happening to stock prices, and people are questioning, is the stock market bubblish at all? I mean, look at this, guys. Wow. From like 2020 to today, I mean, it did drop recently, but look at this skyrocket in stock prices. So let's switch over to Lennar, that currently, as of the 17th, it's trading right now at $151.92 a share. But I want to take a look. We'll look at the 1 year view here. Again, I mean, it looks like something happened in July of 2024. We started seeing the stock prices going up, but look at this downward slide right now. And now let's take a look at KB Home, currently trading at $71 a share. Again, we see a downward trend going on now, but we look at the 1 year view here. Again, guys, July, I mean, these stocks started going, these home builder stocks started going really high. And if we look here at the max view, I just want you to pay attention here. These peaks kind of look the same. And this was about 2005, 2006, right before we started seeing the massive housing crash. And, then they started trading at like some kind of a normal average, it seems here. Again, July, we started seeing some, craziness going on where, the stock prices were going through the roof. Now, again, we're seeing a downward trend. We'll look at a couple others here. This one is Toll Brothers. If you've been following the housing market, you know who this brand is. They do a little higher end home, in my opinion. Some of the Toll Brother communities that I've seen in and around Maryland. But again, looking at the max trend line here, it looks like, we saw some kind of, peak that was happening in the, pre-2005, 2006 time period, or pre-crash 2008 period. But then look what happened. They were kind of stabilized. But again, I mean, this is getting back into, this trend that sometime around July, we started seeing these stock market prices going up again. And then finally, I'm sure you all have heard of the company D.R. Horton, currently trading at $147.61 a share. Again, we can see where, this area here kind of looks the same. Their stocks peaked in around that 2005, 2006 time period. Again, went through the GFC, and then look what's happened. Major growth in share prices. And then if we look at just the 6-month view, again, right around that July period, we started seeing these stocks going off the chart. But I mean, it's, coming back down. Again, all I'm doing is bringing the information. I have no idea what that indicates as far as the share prices, the stock prices. I just know what's happening, boots on the ground with the new home sales, and inventory is rising. Well, the entire housing market seems to be entering a new chapter as inventory nationwide seems to be rising significantly. And for the first time in several years, we're seeing downward pressure on home prices. We'll certainly be keeping an eye on this and bringing you the data as it continues to develop. Housing affordability sure went out the window big time, and we may just be at the beginning of another historical housing market downturn. See you next time. Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.